Hello everyone and welcome back to the channel. Interest rate dropped from 5% to 4.75, which is a quarter point a few days ago. How did that impact the market? Did it actually impact the market? And what is happening? So currently I have clients and I'm dealing in downtown core. I'm dealing in the outer GTA, which is, Vaughan, Oakville, Burlington, Milton, and then the outer layer from Toronto, which is up north. So I would like to discuss all of these areas and what is actually happening to the market and whether that quarter point has any impact in our real estate movement as we speak. So one of the major questions that I get from previous clients, new clients, and anybody that I encounter myself with in terms of real estate is where is the bottom of the real estate market? Did we hit the bottom of the real estate market, and how does that look? So if I just have to look at data, and if I have to look what was happening along the way in the few years, we all know that the interest rates kind of skyrocketed and they kept it for a few years, and nightmare and all of that stuff, right? So and then if we're looking into the interest rate now, this is the first time they have dropped interest rates. So I think it is fair to say that the bottom of the market was June 1st, because from now on, what I can see in the market and a good indicator is outside the GTA core, which is up north. Like I have visited markets of Barrie, Wasaga Beach, Collingwood, Dundalk, Durham, Guelph, Elora. Some of you might even know some of these pockets, and then furthermore Bracebridge, Huntsville, Sunridge, all the way Ajax on the eastern side, right? So what I am noticing right now that some of these listings have expired. They came back on the market, and within few weeks of being properly priced and reasonably adjusted with the market, they started receiving offers. So I would say from an average of 10 properties in a community neighborhood, I would say 2 are getting offers, which wasn't the case, let's say, 6 months ago or a year ago. Like that was not the case. So these price points outside, I would say outside the city, like what I just mentioned, I mean, it's a broad area, we're talking Barrie, Collingwood, Wasaga, Dundalk, Stayner, like all of these pockets, like anywhere around, I would say, $700,000, $800,000 for a detached, they're selling, like not overnight, but they're selling, and we can say it's a normal market. Within 30 to 60 days we usually see offers, right? In Toronto and stuff like that, it is slowly changing. People are getting back into the condo market slowly. They have been rejected, obviously, because of the maintenance fees and property taxes and high prices and whatnot, right? They couldn't afford it. But that quarter point, mathematically, I don't think it will do much monthly, right? Like financially, it will not help you much, but just mentally, people are predicting that the market going onwards will continue to stabilize, and we will see that particular interest rate pattern continue in that downwards direction, which, to that point of previous question, where is the bottom of the market? I can say the bottom of the market was June 1st, 2024, because we can sit and we can calculate it properly, but just overall, I think June 1st, 2024 was the bottom of the market. And going further, I think people will definitely be more open dealing in that real estate space. So when we're looking at other markets like Niagara Falls, and we're looking at markets like London, Ontario, and Cambridge, and Kitchener, and Woodstock, and in Paris, and all of those other markets. It all depends when you have purchased that particular property, because I have noticed that over these few years, you know, when we had that downturn and high interest rates and whatnot, people wanted to come back to the city, and I heard it on so many occasions, like, you know, I just purchased this particular home in Niagara Falls for $1 million. Now I want my money back, and I want to come back to the city. Now, I like it like I have not met a case yet where I can comfortably say that they did not lose money, right? So it was always, you know, the loss of their profit or that speculation at that time did not work out for them, because they paid high prices for that particular product in that particular time. Now they went out, and now they have to basically take a haircut on their profits or whatever the case might be. Usually I would say comfortably it's between, you know, 15 to 20% in price reduction. So these homes or on these particular areas that were $1 million are now selling, you know, for $850, $875, $900 in the best case scenario, right? Which is between 10 to 20% in reduction. So yes, these interest rate cuts that we are seeing today, and that particular style where Bank of Canada is taking us, hopefully furthermore, will definitely impact, and it already has impacted the market. So if you're looking and if you're ready to buy, I think it is a great time. Now, having said that, you have to be comfortable, because buying a property is you know, you have obligations when it comes to that. It's not like, you know, you're buying something that you could liquid maybe fast again and stuff like that. Like it's like that exchange is not as fast as maybe some other investments. So, but at the end of the day, you will still need a roof over your head, and you will still need somewhere to live. And based on so many examples, and I will not get into this right now, real estate is definitely one of those investments that will help you along the way, but it's a long-term game. Forget what we have seen, you know, in the last half a decade. Like it's an anomaly. It doesn't happen, you know, that frequently, and it might not happen in the next 20 years. We might not see spikes like that, and those spikes are not good for anyone, right? Like, you know, the odd neighbor of yours, or maybe you watching, you were lucky, you know, maybe you sold at the right time, maybe you bought at the right time, and you're happy. Good for you. But just the majority now felt pain. Like they did feel the pain of high interest rates and variable rates. And like I said, let's not get into that, but let's look at the future. So if you're looking, please be aware, whatever you're buying, that you can carry it and that you're comfortable, right? Don't exceed your budgets too much, right? Like do your due diligence where you work, what's important for you, number one. Like that's a number one. You look at your budget, you look what you could afford, and if you have a portfolio already, maybe you can shift some of those things and make your purchase more comfortable. So just keep that in mind. And to finally answer that question, yes, even though this quarter point reduction is not substantial whatsoever when it comes to mathematical monthly figures, but definitely triggered that mental barrier where, you know, people are definitely getting back into the market, and we're trading, and most of us that are professionally into real estate are definitely busy. So I hope I answered your question, and you know, if you had a dilemma, you don't have it anymore, but good luck moving forward, and I hope the interest rates continue in the right direction and we all succeed in our life path. So until next time, thank you all for watching. Please like, share and subscribe, and see you all next time.